Hey traders, I'm Andy from FX Scouts. So today we're going to be talking about one of the most important aspects of trading, and that is where to set your take profit or your profit target. And in this video, I'm going to be discussing what methods you can use to set your take profit, including the average true range, then how you can identify the different types of charts and where you would set your take profits depending on the market conditions, and then of course how to look at price action when setting your take profit. Remember that Forex trading is risky and that most traders lose money. This video is for educational purposes only. Okay, so to begin with, I just want to talk a little bit about the average true range. It's a topic that I've talked about many times before, and I specifically talk about it in terms of setting a stop loss. But today I want to show you how you can incorporate the ATR and use it to set your profit target or your take profit as well. So what is the ATR? Well, when the ATR is high, it means that there's a lot of volatility in the market. And when the ATR is low, it means that volatility is low. And understanding the ATR is key because it helps you to gauge how much movement there is in the markets and therefore where you can expect to realistically profit from your trade. Now, the ATR is usually set at a default of 14 periods. So this means, for example, if you're trading on the 1 hour chart, it'll take into account the last 14 hours. And if you're trading on a daily chart, it'll take into account the last 14 days. And it'll tell you the average true range over that period. Now, if we look at market conditions, how do we incorporate this into the ATR reading for setting our take profit? Firstly, you need to understand that there are two different types of markets. There are trending markets or momentum markets, and then you've got your mean reversion markets. And the trending market, of course, is where you get in a bullish market, for example, higher highs and higher lows. And with the mean reversion market, you've basically got price bouncing up and down between two very well-defined support and resistance levels. So we're first going to start by calculating the ATR value for the currency pair that you're trading. And your trading platform will likely do this for you. You won't really have to calculate this yourself. So for example, if you're trading the USD CAD, and it has an ATR of 0.055 or 55 pips, you might use a stop loss of 1.5 ATR, which is around 82 pips. And that'll account for the currency volatility, adjusting for the movement you might find over that particular period. Next, we'll assess the market conditions. So are you finding there's a trend that's unfolding? Or are you seeing that price is bouncing up and down between two clearly defined support and resistance levels? So as we can see here, price is bouncing between two support and resistance levels. And so we set our stop at 82.5 pips around the entry for a short position and at around 122 pips for the take profit at this support level. And the reason I set the take profit level at the level of the support is that it's unlikely to go beyond the level of the support. Because this is a well-tested area, you don't want to set it at a place that it's unlikely to get to. And this produces a very good risk-reward ratio of 1 to 1.5. Now, if we look at a trending market, for example, here we have a strongly uptrending market on the Rand dollar chart. The ATR is at 0.08499, or let's just say 0.085. And in this case, on a long position, you would set your stop loss at 17.96, which is 1.5 times the ATR, and the take profit at 3 times the ATR at 18.34. And this will give you a risk-reward ratio of 1 to 2, which is also a very good risk-reward ratio. Often in a trading market, you can increase your risk-reward ratio slightly just because you're not bound by immediate support and resistance levels. But again, you'll have to keep an eye on the market and see what the price action is doing. So just as a summary of what we've learned so far, firstly, you're going to calculate the ATR for your pair. Next, you're going to evaluate your market conditions. Is the market trending or mean reverting? And then you're going to set your stop loss, of course, and your profit target. So for mean reversion markets, you might go for 1.5 times to 2 times the ATR. but always look at support and resistance and aim for a decent risk reward ratio of around 1.5 or 1 to 2. And for trading markets, you might aim for a 1 to 2 or even 1 to 3 risk reward ratio, depending on what the price action is doing. Now, when setting your profit target, it is very important to remain flexible. As the trade progresses, you want to look at how the price action is unfolding. For example, if the market is moving in your favor, you might want to move your targets to increase your profit potential. Whereas if you see that the market is slowing down and you notice it's starting to chop around a bit, you might scale out of your position or close the position entirely. You can also apply tools like the Fibonacci retracements to try and project potential profit areas. So by drawing the Fibonacci levels from a previous trend before a pullback, you can estimate how far the price could move in the next phase of the trend. And if the price has already tested certain levels, then these could serve as potential support or resistance, as you can see at these levels, and they provide clear points for your profit target. So just to recap what we've been talking about, firstly, you're going to look at your ATR to gauge market volatility and set the baseline for your target. Next, you're going to evaluate the market conditions. You're going to look at whether the market is trending or whether it's a mean reversion market on the go. Next, you're going to set your profit target. You'll aim for a 1.5 to 2 times the ATR. And for mean reversion, you set your target at key support or resistance levels. Next, you're going to refine your targets with price action and technical analysis, and you'll adjust your target as the trade develops. And you can use tools like Fibonacci retracements or simply observe the price behavior. Thank you so much for watching. If you found this video helpful, please like, share, and subscribe for more trading insights. And if you have any questions, don't hesitate to contact us. Our website is fxscouts.com.